Some big news hit the market this weekend. Both tariffs and Deepseek did lead the market to gap down thus far in the future session. So you can see a lot of red so far today on a Sunday night. What I do want to highlight is a couple things here. One, an approaching setup for this week, but then also want to review some of the flow that we saw last week, specifically Friday of last week on the S&P 500. Very interesting put flow. And I'll start us off right here, right now with this $1.7 million, $2.7 million, and $3.9 million out the money put orders. All of these hit on Friday. These are very unusual orders. And you can see they even posted on the Twitter account real time when these did come through, since they are very unusual, like I just said. And these are going to be very profitable tomorrow, assuming the market opens in the red based on what we are seeing right now. So it definitely seems like in this case here, these people knew maybe something would be happening. And also, this isn't news that hit only over the weekend. It was known on Friday, at least the Deepseek portion of it. It was known that there was this competitor that seemingly came out of nowhere for a fraction of the cost that it cost OpenAI and these other companies to produce their LLMs. So this was already known on Friday. It's possible they saw potential for that gap down once the market digested it a bit more over the weekend and they took these positions. We don't know in this case, but what we do know is these are super unusual orders, and these are at the moment going to be very profitable on the Monday open. So super interesting to see these puts hit the tape on Friday. And also look at this over here, guys. 90.7% of the flow filtered for over 500,000 on Friday was put flow. So compared to 9.3% call flow. So very skewed to the bearish side, despite over here, if we go both QQQ as well as the S&P 500 closing relatively flat, all things considered, 0.29% to the downside is nothing really. So this was, I'd call relatively flat, especially after such a bullish close the previous day. So what we can see over here though, technical wise, as of now, based on the future session, yes, futures are down about 0.6%, 0.5 to 0.6%, which would mean we'd be somewhere around, I think like 604 or so. Yeah, about 604, around here, 604 mid-ish, which means that we still are within this mini range over here. And the range I'm referencing is one, this green trend line over here, and then two, this other green trend line. We had been in this range previously during this mini range period in the beginning of December of 2024. And then we broke down below it over here on December 18th. So as of now, it is still just range bound. I would not characterize this as a complete breakdown, despite futures looking super red. Would not characterize this as a complete breakdown and a lot more red to come until 602.70 goes. If this level, and I'll circle this here, if this level goes, this is going to bring a lot more issues. It is very likely we go all the way back down to 590.5, this level that I have here, which would be a nice convergence of this downtrend, this orange line over here. As long as price can stay above 602.70, this is something we probably are going to see some chop within this range, kind of like this, and then potential for a breakout after, or if it wanted that option, could just continue to go down off the news we saw today. However, like we know, the market has a lot of momentum right now, has had a lot of momentum for the past year plus. So we just have to be careful around here. Don't want to preemptively short something just because there's news, especially if it's still retained within this range here. If it's still in this range, I'm not interested in the setup. The setups are going to come either below the range, below 602.70, or above the range, 608.46. And that is where I'm going to make my next setup. That's where I'm going to take it. So let's work through both of those setups for this week, because it's very likely this range does break. The first setup, like I mentioned before, if we were to see downside, let's say, down to around here, maybe a short-term bounce from there and then a break down below. If we were to get this breakdown below 602.70, I'd be looking for hourly candle confirmation below this level, wherever that may be, whether it's 601 or maybe 602, I'm around here, and I would short with an hourly candle confirmation close back above 602.70 as my risk. So it looks something like this, where maybe the hourly closed around here, maybe it retests after, or maybe the 5-minute or 15-minute closes back above, but then we see a rejection and continuation down. That's a potential setup. And by using an hourly candle confirmation as my close, I'm not risking the 1-minute, 5-minute, or 15-minute closing back above, because I don't care about those as much as I would the hourly. That would confirm potential for the range to get reclaimed and likely a squeeze a lot higher to the top end of the range. So this is a possibility for the week ahead, and that's a setup that I would take. Target, like I said, eventual target at least would be 590. 50. So you can keep that in mind. Now, the inverse in this case, let's say all the news gets digested. It's not as bad as it seems with Deepseek and those tariffs. And maybe we fall all the way down to this 602.70 level and then bid off of that a lot higher, maybe have a short-term pullback from there and then break out above. Well, that inverse is going to apply where I trade the hourly candle confirmation close above, whether it's 610, 609, etc. I'd add on that position over here, and my hourly candle confirmation below is the risk. So as long as it can stay above here, whether it's the minute or 5 minute, like I said before, I can continue up from there just as long as the hourly doesn't close back in the range. As long as it can stay above, I'll continue to hold for eventual targets, likely 615 and then this 620. So that's my plan for this week. Again, I do not care what it decides to do while it's in the range. As of now, based on the future session, it is still range bound. Looks like it's likely we retest the lower end of this gap and fill it over here. But at the moment, still within the range. So we have to be cognizant of that. Until the range breaks, we will not see that eventual trend move. And that's personally what I'm trying to trade. If you're a scalper, then of course, have at it with this range over here. It could be great for scalps, but I'm looking for the trend moves. I'm a swing trader. That is what I'm going to look for. So that's the plan for the S&P 500. Going back over here to the flow, I did want to mention some other notable prints. For example, this $1.6 million out the money put for the 610 strike. And then one final thing I want to mention is the dark pool levels that we saw last week, the type of premium we were looking at. It wasn't anything insane, but these levels we're definitely going to want to look at for this week ahead, because bulls are going to have to reclaim these levels in order for there to be a rally from here. As long as these levels are above, then that looks to be distribution before this dump that we saw during the future session. So over here, 1.1 billion in premium at the 609.77 level. As we scroll down, I actually have to go back over to here. Forgot to filter for the entire week, but as you can see here, I can do the same thing. 1.1 billion, 609.77, 1.4 billion, 609.72. And you can see the spread of about 5 cents in between that is over 1.4 billion in total, about 1.5 billion just between both of these. So if you add all of those up, you're looking at over 3 billion in premium between this 5-6 cent spread over here. So 609, we'll call it 609.74, about the middle of this, is a key level that is going to have to break for bulls to retain that upside momentum. And until that does get broken, then again, we're still chopping within this range. So you can mark that on your chart. This is going to be a critical level, and conveniently enough, that is pretty close to where I have my 608.46. Going to be just about where we traded on Friday. So they're going to have to reclaim those previous lows from Friday. And then if you scroll down from here, you can see a couple other levels. The first notable one would be this over here, 1.5 billion in premium and about 1 billion in premium. So 2 billion, all things considered, at the 602, roughly 80 level. So this is another level that we'll have to watch for. And this is a lot closer to my lower end of the range, 602.70 level. So just about there. So this level, for various reasons, is going to be critical for the week ahead. And that, again, is where I'm expecting some type of a bounce if bulls are able to hold it. But if they're unable to, then of course I'm ready to pivot and short that potential breakdown move like I mentioned earlier. So that's the other print that I wanted to share. And I believe there is one more over here, but pretty measly, all things considered, 1.2 billion at the 597.55. So really the meat of the prints from last week were at this 602.80 and then the 609.70s. So those are the two levels that I'm watching for this week. The main one being, of course, 602.70/80, since that is where bulls have to make their stand before this thing could flush a lot lower. I just accidentally drew this line. But again, looking for this level, very interesting week ahead, especially with the volatility we're already seeing during the future session on Sunday. Excited to trade it. Hope you are too. See you next time.